For years, the Federal Reserve has helped to keep global markets awash with cash. One of these days, it wants to stop doing that. But investors who tuned in from around the world today found out the end of the cheap money era wasn't starting quite yet.
The committee concluded that the economic data do not yet provide sufficient confirmation of its baseline outlook to warrant such a reduction. Moreover, the committee has some concern that the rapid tightening of financial conditions in recent months could have the effect of slowing growth.
A few careful words which produced a big Wall Street reaction. The main US stock index hit an all-time high minutes after the Fed statement was released.
The equity markets have skyrocketed. We're up over 100 points within minutes of the announcement that caught many, I would say most of Wall Street flat-footed. We were not expecting no action. We were expecting a minimal action, but not this.
The long-term cost of borrowing for governments and businesses has been rising nearly everywhere since tapering was first discussed in May, and investors have been pulling out of countries like India and Brazil. The latest decision may ease the pressure a little, but the chairman said the basic timetable for ending the money printing program was still broadly on track. The US central bank's already created more than $3,000 billion with this policy. So you might wonder why on earth everyone was so excited about whether it was a few billion more or less this month. But people in the markets care because they think the faster the Fed stops printing money, the faster it might finally raise interest rates. The message on that front was clear. US interest rates will stay low, even after the end of quantitative easing, and perhaps even after the unemployment rate has reached the key threshold of 7%.
What we will be looking at is the overall labor market situation, including the unemployment rate, but including other factors as well. But in particular, there is not any magic number that we are shooting for. We're looking for overall improvement in the labor market.
It shouldn't be good news if America's central bank thinks the US recovery still needs so much support. But the world's investors seem to have decided it is, at least for now. Stephanie Flanders, BBC News.